Dirty dealings, corporate battles, consumer woes. This is Evening 5. Pemodelan Nasional's 30% owned entity, Strategic Sonata, has awarded 2 contracts to build a logistics hub in Section 15 Shah Alam worth a collective 1.4 billion ringgit. IJM Corp was awarded Plot A, a contract valued at 584.3 million, which is expected to be completed 28 months from the commencement date of June 20th. GDB Holdings was awarded Plot B, worth 865.66 million, with work scheduled to commence also in June and expected to span 30 months with a December 2026 completion date. The scope of the work for both include the construction and completion of ramp-up warehouses, among others, and all associated ancillary structures and services. A check with the Companies Commission of Malaysia shows that alongside PNB, Strategic Sonata is 70% owned by Singapore's Mapletree Dextra. This marks GDB's second contract win this year, and according to its Group MD Chia Ham Chia, brings the group's outstanding order book to 1.2 billion, ensuring sustained work until 2026. Meanwhile, IJM also announced a second contract today worth 378 million for Phase 1 of a semiconductor manufacturing facility for Siliconware Precision Malaysia at Bandar Kasia Technology Park in Penang. SPM is part of ASE Technology Holding Co., the world's largest outsourced semiconductor assembly and test company. IJM CEO and MD Loon Chun Fai said rising demand in logistics, warehousing, data centers and electrical and electronics manufacturing presents significant growth opportunities for the group's future pipeline. IJM says this strong project portfolio has strengthened IJM Construction's order book to 7 billion ringgit, comprising high-profile private and public sector projects, ensuring near-term earnings visibility. Global Infrastructure Partners reiterates that BlackRock has not in any way been involved in the transaction relating to Malaysia Airports Holdings privatisation through the Gateway Development Alliance. GIP Head of Transport and GDA Director Phil Ile said in January 2024, it was announced that GIP was being acquired by BlackRock, with the transaction expected to be completed in the third quarter of 2024. In a written reply to Bernama, Ile said that after the transaction closes, GIP's existing leadership team will retain full control and responsibility for the strategic direction and operation of GIP and the companies in which it has invested. GIP is a leading infrastructure investor that manages $112 billion of assets on behalf of its investors, which comprise approximately 500 institutional investors globally. According to Ile, the GDA's offer is an opportunity to apply its expertise to deliver improvements at MAHB that will benefit all stakeholders, including passengers, airline staff, and the broader set of businesses that interact with MAHB's airports, ranging from tourism to manufacturing. Ile notes that GIP is a long-term investor and has typically invested in its airports for over 10 years and needs to make long-term investment decisions with partners to ensure that MAHB's airports have sufficient capacity for decades to come. He adds that if successful with the transformation, the group would consider relisting MAHB on the Malaysian Stock Exchange in the future. The government has directed the Malaysian Communications and Multimedia Commission to initiate the process of selecting mobile network operators to develop the country's second 5G network. The MCMC has been directed to issue the Applicant Information Package, or AIP, on July 1st for eligible MNOs to submit their bids to participate in the development of a second 5G network, according to Communications Minister Fahmi Fazil. The announcement came after 4 of the 5 major MNOs announced that they had fulfilled the conditions precedent in subscribing to a 14% stake in Digital Nasional, currently the country's sole 5G network developer. Fahmi said his ministry welcomes the announcement from DNB regarding the fulfillment of the conditions precedent for the share subscription agreement with Celcom Digi, Maxis, U-Mobile and YTL Communications. Telekom Malaysia is the only one out of the 5 that has yet to fulfill the conditions precedent. Fahmi said the Ministry of Communications is committed to implementing the government's decision to transition the country to a dual network 5G model in an effort to end the monopoly of 5G services, thereby driving a more competitive and sustainable telecommunications industry. MyNews Holdings posted a net profit of 1.73 million for its second quarter versus a net loss of 6.28 million in the previous year's corresponding quarter, thanks to higher share of profit from its JV company and improved profit margin. This marks the group's third consecutive profitable quarter. MyNews has been loss-making for 4 financial years since FY 2020. Revenue for the quarter improved 11% to 192.77 million, driven by improved in-store sales. No dividend was declared for the quarter under review. For the first half, MyNews registered a net profit of 3 million versus a 9.5 million loss previously, while revenue increased 8.4% year-on-year to 388.3 million ringgit. The company says that its constant efforts to improve product mix and services to meet both market trends and customers' demand should help sales revenue to continue its upward trend. While MyNews admits that the market segment is becoming more crowded and competitive, the group believes that there is still room to grow its brands and will spare no effort enlarging its store network. MyNews currently operates 622 outlets, comprising 471 MyNews outlets, 131 CU outlets, and 20 WH Smith outlets. Scientex posted an 18.9% year-on-year jump in third quarter net profit as healthy contributions from its packaging and property segments propped up revenue growth. Its latest quarterly earnings came in at 130.5 million, up from 109.8 million previously, driven by an 11% expansion in revenue, which improved to 1.1 billion from 997.1 million a year earlier. Packaging revenue grew 3.4% to 656.9 million from compared with 635.4 million previously, bolstered by exports of industrial and consumer packaging products. Meanwhile, property revenue rose by 24.7% to 451.1 million from 361.7 million on the back of ongoing construction progress and project completions. Earnings per share stood at 8.41 cent versus 7.08 cent previously. The company declared a single-tier interim dividend of 6 cents per share payable on July 19th. Looking ahead, Scientex CEO Lim Peng Jin highlighted the group's strategy of accelerating new property launches to meet strong demand and expanding affordable housing across Peninsular Malaysia. Scientex also aims to enhance its packaging division's competitiveness through operational excellence, cost optimization, and sustainable packaging solutions. Lim said this multifaceted approach, backed by the resilience of both segments, positions the company well for a sustainable performance in FY 2024. Shares in Scientex settled 1.4% higher at 4 ringgit 29, giving the group a market value of 6.65 billion ringgit.